Hi everyone, and welcome to the Buffett and Beyond Research Stock of the Week. And this is August 10th, 2024. We're going over Fortinet, which is in the cybersecurity industry. And folks, everybody needs cybersecurity. And the reason we're going over Fortinet is because it was doing so well, and then it took a couple of months off, and then all of a sudden totally surpassed earnings expectations, was up 21% in one day. So it's in our growth portfolio, and let's go look at it. And remember, folks, if you want to live on this beach like Jimmy Buffett used to, you've got to learn how to invest even better than Warren Buffett does now. And for those of you who want to see more of these type of stock selections and our analysis of these stocks, sign up for our full month free subscription. We get 4 letters a week, Tuesday, Wednesday, Thursday, and Friday, and it's filled with stocks like Fortinet, Crowdsource, and on, and you get 3 videos each week, which the stock of the week is one of them. We just need your name and email, no credit cards or anything. Just go to buffettandbeyond.com, right down here, Buffett and Beyond. Buffett is spelled 2 F's and 2 T's, buffettandbeyond.com. Sign up for the free subscription. You'll get a full month worth of stocks, folks. I know you will enjoy it. And let's see what Fortinet does. Most of you know already, but it provides cybersecurity solutions to businesses of all sizes and government agencies. And Fortinet just recently, just a couple of days ago, reported strong second quarter 2024 results wherein both earnings and revenues beat estimates and improved year over year. And Fortinet reported second quarter 2024 earnings per share, which beat projections by almost 40%, folks. And the bottom line climbed 50% from a year ago on these quarterly earnings. And total revenues improved 10.9% year over year, driven by strong growth in services and revenues. Wow, it's hot, folks. And let's look at the analysis, the clean surplus analysis of Fortinet versus the average stock. Green is Fortinet and the blue is the average stock. So when we look at the clean surplus return on equity, and think of a bank when you think of the return on equity, or the clean surplus return on equity, that is, because it's so different from the traditional accounting return on equity. So would you rather put your money in a bank that's giving you 13.5% a year, or one that's giving you 31% per year? No question, is there? How about net income? Doubling the average stock. So Fortinet is doubling the average stock. And folks, cybersecurity is a industry that is growing very, very fast. And revenue, well, 3 times the revenue of the average stock out there. So Fortinet looks good on all these numbers. And then when we look a little bit closer, we look at this clean surplus return on equity, and we can see that this year, over last year, the earnings fell 6 cents a share, or projected to, before the other day. But now this number is going up. So we don't have the number for the full year of 2024, but we know that the second quarter grew better than expectations, and these are the old expectations in here. So rather than being net income growth going down 4.1%, but look how much it's been growing over the years. So, I mean, we're talking about a decline of 4.1%. Not bad at all, folks, after it's grown 32, then 45%, then 37%. And so we're revising this number, or will be revised in a couple of days by the company, and then we'll see what it does. But right now, the market loves it, up 21, 22% right now as I'm recording this. And next year, the numbers are intended to be well above the market averages. So that's why the stock is doing so well. How about years to pay debt? And this is Buffett's rule of thumb. If a company takes all the money it's making and uses it to pay off its debt, how many years would it take? His rule of thumb is 5 years or less. Our rule of thumb is 3 years or less. Folks, this company can pay the stock off in less than 8 months. So this is very, very good. And back to retention rate over here, 100%. That means it's taking all the money it's making and putting it back into itself in order to grow. So when we look at the year to date, so it was doing so well. Black line is the S&P 500. It was doing so well in the beginning of the year, right to our projections, because it's been in our portfolio for a while. And then all of a sudden it started falling off, and it really didn't look too hot. And then all of a sudden, just the other day, it popped up over 20%. And now for the year, with the S&P up about 10%, this stock is up over 20%. So right now it's doubling the S&P 500, a nice stock to have in your portfolio. And let's see how it did over 5 years. Yeah, here it was, and this is why we're in it. This stock has done really, really well, and here we are up here. We had this big shoot up of over 20% just the other day. And so this stock is up over 300% for 5 years, with the market up about 70% over 5 years. So we're looking at more than 4 times the market averages. And there we are, folks. Fortinet is in our portfolio. It's been there for a while, and we certainly like it. So, folks, we had a tough week this week, but it looks like the market wants to rebound a little bit in here, and we'll see what happens. But we've had a really good ride, a tough past couple of weeks as the market readjusted to the possibility of inflation and also recession. So we don't want those two things going hand in hand. So go take your mind off the market. We're back on a roll, we believe, and we think the market will go up from here. And so you take it easy. Have a good weekend, a safe weekend. Be with your family. Go for a walk. Have a Sunday dinner with your family. And folks, we'll be back here on Tuesday, so we'll see you in a couple of days. Have a great weekend.